All right, hello everyone, and welcome to the middle. Actually got a pretty cool video for you guys today. I got a question from a viewer. It's actually a really good question. So at the syndicate 07 asked, can you do a video on the process involved in deciding whether to invest in a foreign country, if it's a good idea, or for example Poland? Stocks, bonds, and different stuff like that. So that's actually a really good question. I like it because, it's kind of, what do you say? It's actually kind of broad, and I like being able to do that because it can cover so many things. So it's a great question. You did well in asking that. Okay, so I did a little bit of research. I wasn't going to dig too deep because each country is going to be a little bit different. So, Poland specifically, the process of investing in that country, I cannot tell you because you could, Germany's right next to it, and it's going to be different. It's a different government, different laws, so that's, it's going to be different through all the different countries. I can definitely tell you that it's riskier. They do each of these countries are going to have trading floors that you could trade in. Stuff like different exchanges, like the New York Stock Exchange. They're all going to have their own, and some are going to be riskier than the others. But normally they all have their own kind of regulation on that. So. So to answer the question whether or not it's a good idea to invest in these countries, I'll just go through a little bit of information on Poland in general, since that was the one that you specified. And we'll just go kind of from the macro of Poland, and then we'll back up to the bigger picture altogether. Okay, so Poland is an emerging market. It's part of the Big Ten, the BEM. It's the big emerging markets of the world. It's one of the top 10s. Emerging market pretty much is just going to be either it's continuously growing, but it's missing a few different parts of a market. That would we consider like parts of the U.S., Canada, that they're missing a few different things here and there on that to be considered a normal market, or they were a normal market and for whatever reason they had an economic collapse, a war, something like that, and they fell off the deep end, and they're continuously growing up. Tons of countries around the world are considered emerging markets, but these are there's a top 10, and all you have to do is Google a top 10 list, and Poland's going to be one of those. For example, let's look at the economics of that country in general to see, hey, let's see what they produce to see if it's going to be a good idea to begin with. One of the first things that I looked into is retooling, machinery, textiles, metal, and some food. They're not really known for food, but they will do some food. That's some of their exports. So that's some of the things. For one, think of you can't pick a particular product that comes from there, right? Like I normally don't look over like, oh, that came from I bet this came from Poland, kind of like that we do with China. So they don't produce as much, but in essence, kind of what you're looking at are these things in a bigger picture, are these things going to be needed for a long haul? Do they produce enough things by investing in this market that is going to help the country and or the stock, bonds, whatever you're invested in, survive? Okay, is that economy going to be strong enough due to the products that they export? Another one of the things that they're going to do is furniture. They're actually pretty well known for furniture. It's one of their most successful items altogether. So there might be some furniture companies that that are in there that might be doing pretty well right now, seeing as we are kind of at the peak of the market. So what it really comes down to is the debt cycle, where we are at in the bigger picture. Okay, I personally would really think twice, or I would really look into and have a lot of information before investing in pretty much anything right now. Right now, the U.S. our market's coming back up for odd reasons here and there. Our Federal Reserve interest rate has already stopped, and the Federal Reserve is now going dovish, which means they're saying that, hey, we're not going to punish the market anymore with higher interest. Okay, so that for me is already kind of telling me that we're coming for a slowdown. China, proven slowdown. So you did ask for Poland. So I do my own research literally every day, and I wanted to show you guys this. This is factory output contracts in Germany. So I don't know if you know, but it's about a 7-hour car ride, depending on what city you're going to from Poland to Germany. So this is the factory output that we have coming down here. So from right to left, you can see the year. It's 2019 here in the corner. It's going down. It's going down rather significantly. The contracts are falling. That means their exports are being reduced as well. There are not as many people getting contracts to produce. So you say, okay, well, that's Germany. It could be a little bit different, but let's see what Germany produces. Okay, let's see if there's similarities or if there are, big differences. If you really look at it, once again, so we're going to say that Poland is going to produce machinery, textiles, metal, and food, and almost to the T, that is what Germany produces, except for Germany, they have a lot more automakers in there, okay? So those higher ticket items. But what they produce, since they are very close geologically, they produce a lot of the same materials. They're going to produce the same type of food because their climate's going to be pretty close. The metals that they produce are going to be pretty close due to their geography. So you can imagine that if the contracts in Germany are already going down, now that's just a piece of information that I found in a different search, but since you're very close, that's actually kind of related. So that I could say I would watch what I would invest in when it comes to investing in Poland, because a lot of the factory contracts is once again retooling machinery, very big in Poland. If Germany, which is a bigger market, if they're going to be going down, you would imagine that one of the weaker, smaller markets would also take a hit, if not affect more negatively than Germany. So that's something to think about. And I don't want to go all negative on this. I'm sure there are different products that are gonna do just fine coming from Poland, but those are the ones that you're gonna pick out. So that was talking about stocks, because if we're talking about purchasing stocks on an exchange, now we're talking about those were equities. Now let's move into their currency. Let's move into their bonds. Okay, for all the viewers, I don't want to get too in depth on too many things, because I want all of this to be relatable. I want all of this to make sense. Okay, but so the central bank altogether, they're different. From our country to Canada to Poland, they all have their own central banks. They all have their own currencies, and they all have their own interest rates right now. So when it comes to that, you have to say, okay, where are they in their cycle? Okay, so you got to look at the macro and micro of each country. That's something that you have to be very comfortable with. My advice would be find someone who currently invests in that country. Okay. That would be my advice, because they're going to be the ones that say, yes, this is how it's done. They'll know how to do it safely. Make sure and double check to make sure that they know what they're doing. But yeah, so like right now, the Federal Reserve and for the United States, the Federal Reserve's federal funds rate is 2.5%. Okay, Canada 1.7%. All right. Now the value of our currencies, that plays a factor. Okay, that is a variable in this. Poland is going to be the exact same thing. Their Federal Reserve is going to have a different interest rate. That is depending on the size of the market. So our market's bigger, okay? It might be more inflated because of our national debt. We have a bigger national debt. But yeah, I mean, that could be one of the reasons. I'm assuming that's one of the reasons, but we are a bigger market, so we might be more inflated due to the value of our currency, and that's why our interest rate, our federal interest rate is going to be a little bit higher, which is, once again, if the interest rate's going up, that means they're trying to pull money out of the economy. Okay, if they're trying to pull money out of the economy, that means there's inflation. The main reason for the Federal Reserve, as they say, is that they're trying to control inflation. Okay, so that is no different between here and Poland. That is the main purpose, supposed to be the main purpose of a central bank, is to control those kind of things. So that's something that you really got to look at and say, hey, where are they in their cycle? Okay, where were they 10 years ago? Because normally what you're looking at right now, and this is kind of once again, really big picture. China's taking a hit. Germany's taking a hit. The U.S., when it actually comes to GDP, we're going to be taking a hit. We kind of had a head fake just recently when it actually comes to the sales of some of the products, okay? Once again, debt is money, okay? Debt spends like money. How often do you know the difference? Does the cashier, when you buy a product, how often do they know the difference between a debit card and a credit card, because sometimes debit can be run the same way. Swipe it and walk out. They don't know if you're borrowing that money. That's debt, okay? It makes no difference to them because they're still getting paid, all right? So debt is money. Debt is the exact same thing, okay? I want you guys to remember that, because in my past video, I just said that actually these statistics came out, I forget what month of last year, but it was over 13 trillion in consumer debt. $13 trillion in consumer debt. That goes to our GDP. Think about it. That debt that we're spending, that we count as growth, that's pure debt. Okay, that is literally the shrinking income of people, like of American people. They're latching themselves onto four-wheeler, boat payments, brand new car payments, which is already a bubble because the average vehicle is anywhere between $35,000 to $45,000 to buy a brand new vehicle. It's insane. That is massively inflated. That won't stand for very long. The subprime auto crisis is going to be coming. It might all hit at once with another financial crisis, which I truly believe we're going to be having coming here within the next year or so. I've been talking about it. It's been coming. All of the signs are there. It just really gets to a point of when it drops, and it drops fast. So it can go up and down. What the market's doing right now in the U.S. is wild, going up hundreds of points a day, down hundreds of points a day, record this, record that. I mean, we've gone through so many records that it has to be apparent eventually to most people. It has to be apparent that stuff's going crazy. Okay. I haven't had the time to research into Poland, but that's something to look into Poland. Are they going through those same things? Is their market going rather steady? Is it slowly declining? Those are the things to look out without a doubt. So once again, at the Syndicate 07, I totally appreciate the question. I hope that you got some value out of that. If you guys got some value out of this, I seriously, I like to say seriously apparently. If you guys got some value out of this, please give me a thumbs up. I really appreciate hearing from you guys, and I'm looking for another question. I'm always doing research to bring relevant stuff to you guys, and if you can, I'm finding the stuff that's out there that's interesting that I feel like you need to know, and I want to know what you want to know. This is the stuff that if I don't know it off the top of my head, there's a good chance that I have an opinion on it, but I will go and do the research myself to get you guys the answer, because that's what I'm here for. So I love you guys. Thank you so much for watching. And if you haven't subscribed yet, please subscribe. We'll talk to you soon.